This morning, we saw a major surge in dollar strength off of the back of some pretty strong NFP report numbers. Jobs came in way better than expected. Here's a look at this week's non-farm payroll, and what you can see is that for the month of December, the actual number of jobs came out at 256,000 jobs added compared to the forecasted 164. If we zoom in here, you can see there's the red dot. That's our forecast, and what came out was way higher than expected, showing some aggressive hiring took place relative to forecasts in the month of December. Unemployment rate also ticked lower in December, which just again kind of nails in the coffin. This was a very strong NFP report. And that follows this week's aggressive job openings number that we got, and unemployment claims are trending lower. It's fair to say the US jobs market looks really strong compared to what analysts thought it would look like. And I know, with Trump taking office in 10 days, there's going to be a ton of conspiracy theorists out there saying the jobs data is all cooked. But look, I'm just operating off of the best that we can, which is the data that we see. You can make your own speculation how much of it is true, how much of it is just going to be revised later, totally up to you. But the market trades off this economic report, and for the most part, I think it gives us, even if it's not totally accurate, a good general idea of hiring direction in the United States, which would suggest the labor market is killing it. And look, that stronger US dollar poses some issues, because if we take a look, for example, at the 10-year yield, you can see it jumped at the same time to the highest level in several months. In fact, if we scroll out, we're at the highest levels that we've been since November of 2023. And this right around this time, by the way, guys, was a serious inflation scare period where the market actually dropped for a couple months. I'm sorry, actually, let me get that right. We dropped as the yields rose, and then we had a really nice recovery move in the stock market and risk assets once yields started to cool off. The question is, are we going to start to cool off soon? Because if we don't get it too soon, the market might have a little bit more of a panic. Speaking of panic, here's the S&P 500, which dropped off pretty hard here this morning, and that's following, other sell-offs that we've had recently. NASDAQ down 1.6% here this morning, S&P 500 down 1.35 at the time of recording this, and the Russell getting hit the hardest by this, down 2% this morning following the higher interest rates on the 10-year yield. And if we zoom in right here, you can see I'm looking at the December 10th meeting for 2025. Yes, that's far away, but let's look at what it's showing us over here. It's showing us that currently we're at 425 to 450 as our target interest rate. That is 4.25 to 4.5%. And we're expected here to stay essentially either unchanged all year long. There's a 25% chance according to the bond market, but most likely the probability is that we see 1 to 0 rate cuts this year. Today's video sponsor is ProfitX. If you haven't heard of ProfitX, ProfitX allows traders up to 1.2 million in simulated funding, and they allow traders to trade a little bit of everything. With 800 plus assets under their kind of belt, you can pretty much trade anything you'd like. They also offer a generous discount for my subscribers. If that's something that you're interested in finding out more about and doing your own due diligence about the prop firm, check out the links down below in the description if you're interested in exploring ProfitX. And most shockingly of today to me is that gold is continuing to push higher despite strong jobs data and a strong US dollar and rising yields. But there's a little bit of a hidden fact in here that I want to discuss, which is if we go take a look at oil today, you'll also notice oil had a big jump. And if we take a little bit of a peek at the numbers here or the data here, you can see oil jumps on US sanction fears. So Russia, US sanctions, that is going to cause a little bit of fear. So while this is a little bit confusing at first, I think this is a little bit of a geopolitical move mixed in with today's numbers. So at first glance, you might say, what the heck? Gold is just completely acting out of whack. But I think it is more of a geopolitical move rather than simply jobs data was great, let's buy gold, because usually that would be the exact opposite thinking. It seems actually that we had some US sanctions data which drove oil prices up massively and probably brought gold up with it a little bit. To test that theory, you can actually see that right when the jobs data came out, it did actually send gold lower, but gold recovered the move and continued where it was headed anyways due to the geopolitical risk. Also, guys, I wanted to make you aware of the discount that we're currently doing on our VIP VIP signal service, which will allow you to see every trade that I am taking inside of our VIP Discord. Currently, we're offering 30% off of our memberships, but YouTube subscribers get an extra 5% if you use the first link in the description down below to speak directly to our support team. The reason we do this is so that we can have a conversation with you to see if the VIP group is right for you. And if you're interested, you can let us know just by direct messaging us using that link. I'll also pin it in the comment section down below so that you can easily send us a DM and let us know you're interested in taking advantage of that 30% off New Year's sale. Every trade that I take gets shared in full detail to our members, and I trade indices, commodities, Forex, ETFs, stocks, and so much more. We also have other traders in our group sharing their ideas. You get access to each one of these ideas whenever it goes out, sent directly to your phone or your desktop. So don't miss the chance. Come join us for 2025. Oil has also been top of mind recently. If you've been watching the streams and videos, we've been talking about this rising oil price. And although I wasn't in the trade, I'm kind of kicking myself for that because again, this was a massive bounce in the price of oil, but has since come back a long ways. I mean, look at this is definitely kind of indicative of a geopolitical move when you get these ginormous one directional moves and then reversals very quickly. That is very, very telling. Usually that is kind of a geopolitical type price action move. In fact, we can go to the 5-minute chart. Especially geopolitical is usually when it's like this drifting trend rather than just kind of like an all-in-one spike. That is very typical of that kind of move. Anyways, big move up and reversal in oil prices here. We do want to see oil prices stay under control because if they do break out too much, that could be inflationary and cause some issues for us in 2025 in terms of the rate cut story. The NASDAQ broke this key level of support, but I'm going to watch this close to see how it closes today, because if you do get a bounce back by end of day, I would argue that's actually quite strong for the NASDAQ. But if we close like this, if we close below these key levels of structure, these wick lows, that could signal some further downside for equities in the short run as markets are kind of digesting and coming to the realization that we might not get that many rate cuts this year if we don't start seeing some cool off in inflation and in the jobs reports. TLT, which is a position I've been struggling with, is still hitting fresh lows, bouncing a little bit here today, but this is a position that I have for the longer term. And on the account, although this is a good sized floating drawdown, it is a small portion of the portfolio. I have about 9-10% of the portfolio invested right now in TLT. So I'm interested in kind of holding this one and letting it kind of run. I do think that at some point yields are going to cool off, and they may cool off big. And if that does happen, if kind of the Trump tariff fears, that sort of stuff is a bit overblown, yields could come down and that could give us some relief in stocks. So I do remain bullish on stocks and bullish on TLT. So for the time being, I actually think that this is a bit overshot for the 10-year, even though everybody is kind of terrified. I'd also be very curious to see how price action trades here above this level, because if you get a strong break and close today, it's possible that I could be early to that idea and that TLT could continue lower as bond yields rise. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.